Hey, good morning, everybody. Chad Foe here with Mason McDuffie Mortgage. Today is Friday, June 4th. A few things I wanted to touch on real quick, and the first thing I wanted to give out a quick shout out to the Asian Real Estate Association of America. Played in a golf tournament with them last Friday. The golf tournament was there to raise money for 4 families that were in need of some major repairs to their homes that they couldn't afford to do themselves. Had a great time out there, and it was their first annual tournament. Putting a golf tournament together is not easy, so congratulations, AREAA, on your first annual golf tournament. You guys did a great job. Second thing I wanted to touch on was the USDA. USDA loans now are being accepted. We're taking applications on those. Although the premiums aren't finalized right now, we're still taking applications. This is great news. They did, however, raise those funding fees from 3.5% on purchases to 2.5% on refinances. But if you end up paying one of those premiums and they end up finalizing at a later date, or when they do finalize and those premiums come down, you'll actually be given a principal reduction. This assuming that they do lower those rates. So even if you pay those and they ended up lowering them later, you're going to get that in a principal reduction. So this is great news. And so USDA is back. And if you guys don't know about this, it's a great no down payment loan. So if you guys have any questions on it, please feel free to give me a call. Second thing, Fannie Mae. All applications taken on June 1st or after are going to now require credit pulls at the time of funding. So we're going to look for credit inquiries. We're going to look for new debt acquired. This is a huge thing, and we need to start talking to our clients and letting them know what is going on. We cannot apply for Kohl's credit cards when they offer 25% off. We can't go and apply for a Macy's card or Nordstrom's. We can't do any of this. During the time of buying a house, we've got to be really sure not to pull that credit too many times, and especially once you're in contract, you cannot pull it again. This can cause huge delays at the end of the process, and we already expect to add another 24 hours onto funding because of this verifying that we're going to be doing at the end, okay? So just a heads up on that. I'm going to go ahead and put mortgage-backed securities up on the screen right now. The first I'm going to show you is a 30-day chart. So this is the last 30 days. As you can see, interest rates have been doing really good. Now what I'm going to do is I'm going to put the 10-day chart up. As you can see, the last few days, interest rates haven't been doing that well. So although interest rates are doing good and the media says, hey, they're great, and they are great, the media is always behind a little bit. Another thing, job reports came out for jobs created in the month of May. They came out at 431,000. A lot of experts were saying that these were going to be between 500 and 700,000 jobs created. That number was far worse than expected. And out of those 431,000 jobs, 411,000 were temporary census workers. So not a lot of jobs in the private market, in the private sector. This is where we really need jobs created to get this economy going. It's small business that really gets the economy going. At least that's my belief. And so this is where we need to see it. Interest rates right now. Over here on the left-hand side of your screen, first I'm going to go over FHA. And keep in mind, these are all 740 FICOs and higher, okay? So this is best case scenario credit-wise. So FHA, we've got no points. In fact, this comes with a $500 credit credited back towards closing costs. 30-year fix is 5.25%. Your 15-year fix is at 4.5%. We've got your conventional financing. This is 20% down. This is up a little bit from 2 weeks ago. We're at 5 1/8, 5.125. On the 30-year, and a 15-year, we're at 4.625. Investment properties, this is no points, so this is for your investor. Up a little bit from 2 weeks ago at 6.125. This is actually a big jump from 2 weeks ago on that particular program. And on the 25% down, you're going to be looking at 5.75%. 203Ks, this is an amazing loan, you guys. This is a loan, especially dealing with so many distressed properties like we're dealing with right now, where it needs new carpet, paint, maybe kitchen needs to be remodeled. Granite countertops, stainless steel appliance. We know that everybody wants that stuff in their kitchens. New lighting fixtures, things like that. These are all things that can be done in a 203K loan on these distressed properties, and it can be done within 2 weeks after the closing of the loan. So they can literally move in the house pretty quickly after that loan records and move in the house move-in ready. It's an amazing program. Interest rates on that at 5.375 with 1 point. Then we've got your home path. This is a 30-year fix with 5% down, 5.75 with a point. This is still a great loan. It's really designed, in my opinion, to do the 5% down, although we can do it with 3% down. It's much harder to qualify for, and the interest rates are much higher. So you're looking at least 3/4 of a point higher, and you're talking about huge buy downs. So you have to get a credit from the seller of at least a minimum of 3%. So in my opinion, the 5% down is a much better loan. And at the end of the day, keep in mind it has no mortgage insurance. This loan is actually a lower payment than an FHA loan at the 5.25%. So that's all I've got for you guys today. I hope that you guys have a great weekend. Again, Chad Foe with Mason McDuffie Mortgage. My phone number and email will be at the bottom of the screen. Take care.